Okay, our next guest says the renewed plunge in the ruble, despite policy tightening, raises serious questions about the implications of collapsing oil prices. Joining us is Ashraf Laidi. He is Chief Global Strategist at City Index. Ashraf, great to see you as always. You tweeted out this morning that expect this next. Russia announces officially abolishing U.S. dollar circulation. Just expand on that for us.
Yeah, 5 days ago I would have said that was a tongue-in-cheek, but now with the stepping up of the exchange controls by the Russians to take money out, I think probably the next step would be an outright abolishment. Now, so we're not trying to say these things just in order to make a headline and to draw attention, but with the way things are happening, this is not 1998. There is more of a structure to the economy and to the government in that country. If they do abolish the circulation and the use of U.S. dollars, obviously that will, that will probably further escalate the safe haven into gold, and probably it might have a sort of a pullback in the U.S. dollar and further gains into the Swiss franc. But will they do that? Probably not. Look, the Russians, they have spent around, I believe, 17% of their foreign exchange reserves in simply intervening, and the situation is bad. However, they do gain from the falling ruble in getting and selling some of their exports. The other aspect, the other advantage, or I would say the positive aspect to the Russian economy is their relatively low budget deficit. But as interest rates are pushed further, that could increase the servicing of the debt. And so the question is, will we see any downgrade from the credit rating agencies? And if that might be the next big shoe to drop, if there are any shoes left in the Russian ruble.
Ashraf, you say that a 1998 currency crisis could be in the offing, and I was just going to ask, would that be precipitated by the other shoe falling, as you say?
Well, look, yes, but it's not just a Russian story. If we remember, summer 1998, it was a state in Brazil, the governor of a Brazilian state, saying, I'm not going to pay debt. It was one devaluation after another by the Russian ruble, and we all know what's happening with Asia. Now, if you go back, back then, the dollar-yen was almost all-time highs. The dollar right now is very high against the yen, i.e. the yen is very cheap. So it makes life very harder for the Koreans, for the Indonesians, for the Malaysians. And so that's one aspect. Let's take, so the BRICS, so the BRICS. So the Brazilians, they depend on soy prices, or prices of soybeans, and the sugar, of which they are the leading exporters. If you look at a chart of what soy and the sugar did, they basically collapsed this year. And no wonder we're seeing the Brazilian officials are talking about the currency and attempts to stabilize the Brazilian real. China, we don't know what's going on. They are in a deflationary spiral as far as producers' prices index. The PPI has been below zero for, I believe, 2.5 years or 3 years. CPI has been slow. That leaves India. Probably India might be the only sunny spot in the BRICS, because they are the most heavily dependent on import of oil. But things are going into the Turkish lira, and we could see a contagion, but this time with a reason.
I mean, for the last couple of years, all kinds of countries have been trying to make sure that their currency devalues. As you say, now perhaps with a reason we're seeing the currencies devalue. One of our colleagues this morning was saying, it starts in currencies, goes to bonds, and then it heads into equities. The equity markets have had some rough patches over the last couple of weeks. Are we seeing this play out in equities at this point?
Yes, we are. I don't think we have enough time, but the technical parallels between what the S&P 500 and the Dow are doing, or in the 2 months run up to now, compared to the 2 months between July 2007 and the October 2000 peak. The parallels, the technical parallels, are pretty scary. Maybe you should invite me one day on a full show about this, and we'll tell you why is it scary. What I think is going to happen in the S&P 500, and we talk about that index, we might see a rebound tomorrow, courtesy of a nicely dovish press conference by Yellen, whose goal is going to try to offset any hawkishness by the forecast that is going to come out of the Fed. She will have the stage to herself. She will be asked about the ruble. She will be asked about low inflation, and she's going to tell people, she's going to show her version of the Yellen put. No, she's not going to start QE, but she's going to pretty much close the window, not the door, on any rate hike next year. That will get the stock market going a little bit, but it is no longer enough just by a dovish chatter to push the stock market back to all-time highs, and I think this will be a selling chance here, and I probably do not think that we're going to get a Santa rally. I'm talking to you from London. The FTSE is the only index in the world that has rallied in the past 11 Decembers. Probably we're not going to see it this year.
Okay, we'll have to leave it there. It sounds like we'll have to have you back for further chat on that. Ashraf, always enjoy talking to you. Thank you. Shukran. That's Ashraf Laidi. He is Chief Global Strategist at City Index, and he joined us, of course, from London.